Hi learners, recently I came across a news which says that Tata Motors owned JLR has announced its new global strategy which is known as Reimagine, which says that Jaguar brand is going to have only electric vehicles from the year 2025 and it is going to exit the diesel market altogether by the year 2026, and it also looks to be a net zero carbon business by the year 2039. I was thinking of doing a case study on Tata Motors and JLR. Yes, today let's see how Tata Motors, which is a part of Tata Group, completed the acquisition of JLR from Ford for a net consideration of $2.3 billion in all cash transaction in the year 2008. By 2013, the global appeal of JLR increased sales massively. This success surprised many analysts and investors who had maintained that Tata Motors was making an expensive mistake in acquiring JLR. So today we are going to see the turnaround plan of Tata Motors Jaguar Land Rover. In 2006, reports said that losses at Jaguar stood at around 715 million US dollars. Jaguar was not performing well as it was unable to provide any profit for Ford due to the high manufacturing cost in UK. Bringing down production cost and turning around the company successfully will be the challenge for the company. This is the reason why Ford was ready to sell the JLR at half of the price. Let me take you through some of the problems faced by Tata Motors in their acquisition of JLR. One such problem is the lack of access to credit in order to repay the bridge loan of Tata Motors of $3 billion US dollars. Tata Motors was facing problem in cash liquidity and they have a negative working capital after the acquisition of JLR. Besides the debt ratio, which has increased over the 5 years, they also have a negative interest coverage. Tata Motors was finding it difficult to access credit and raise fund from the stock market due to the tight liquidity conditions, depressed stock market, and the lack of investors' confidence. The bridge loan was due on June 2009, and yet at the end of the year 2008, Tata Motors was able to repay only $1 billion US dollars out of $3 billion US dollars. The next problem would be global financial crisis, which has severely impacted the global automobile industry, especially the luxury car segment. The demand of automobile is also in decrease. The company's export was declined by 38.6% during the year 2009 due to the meltdown in major international markets. The third problem would be increasing material and fuel prices, which had slowed down the demand of vehicles. High fuel prices have caused Tata Motors to feel the heat of slowing demand. Decrease in sales volume and increase in cost, as well as bearing the increment of short-term debt, would easily kill Tata Motors. Another problem faced by Tata Motors is their share price, which has dropped drastically and affects its global image. As the debt market was frozen, Tata Motors turned to the equity market in order to raise funds. But the share prices of Tata Motors is also significantly decreased due to the uncertainty of acquisition success and global crisis, which resulted even in decrease in the net profit and the earning per share of the company. Besides these problems, Tata Motors has the competitive advantage from the overall international market through the Tata Group of companies like Chorus for steel. Chorus was the main supplier of automotive high-grade steel to JLR and other automobile industry in United States and Europe. TCS for providing engineering design, manufacturing solutions and sourcing services. INCAT provides services like supplier programs, consulting services, and global outsourcing. This would have provided a synergy for Tata Group on a whole. Also, from this acquisition, Tata Motors would also gain on several fronts from the deal. One, the acquisition would help the company to acquire a global footprint and enter the high-end premier segment of the global automobile market. After this acquisition, Tata Motors would also own the world's cheapest car, which is the Nano, as well as the luxury cars like Jaguar and Land Rover. 2. Tata also got 2 advanced design studios and technology as a part of this deal. This would provide Tata Motors access to latest technology, which would also allow Tata to improve their core products in India. 3. This deal provides Tata an instant recognition and credibility across the globe, which would otherwise have taken several years. 4. In the long run, Tata Motors will surely diversify its present dependence on the Indian market. Let me take you through the revival plan of Tata Motors in order to overcome their problems. Tata Motors responded to market needs immediately. Earlier, Jaguar lacked efficient engines at the time when fuel prices were touching the sky. During the year 2009 to 2012, Jaguar could barely sell around 50,000 units across the world. Mr. Tata responded quickly by ordering up more efficient engines. Tata Motors majorly focused on 3 areas. 1. Managing the liquidity throughout the crisis. 2. Cutting cost via restructuring. And 3rd, the most important one, is investing in new products to support the future growth. Jaguar Land Rover's strategy was to invest proportionately more in new products by pumping around 14% of annual revenue into research and development and capital expenditures, which was far outpacing the industry's typical capex ratio of around 5%. Tata Motors retained the existing management structure at JLR with no imposition of Tata's management into it. Later, for the first time ever, JLR became responsible for its own money, and Tata assisted them in setting up a proper cash management system in the company. Tata also pumped in around £1 billion. It even raised cash by selling some of the stocks in Tata Steel and other groups of the parent company to keep the cash flowing. In 2010, sales rose sharply on the back of the new product launches and hence improved the market sentiment. With the success of XJ in 2010, JLR accounted for more than half of Tata Motors' business in 2010. JLR's debt-to-equity ratio went down to 1.6 times from 4.5 in 2009. JLR recorded profit for the first time after the acquisition in 2010, and the British brand has a headcount of more than 43,000 employees. By 2013, Jaguar's product reinvestment strategy began to pay off, with sales jumping to nearly 77,000 units. Jaguar sales have more than tripled since 2009 to 178,000 units for the fiscal year ending in 2017. Thank you everyone for watching this content. I hope you like this video. Please give it a thumbs up if you like it. That would mean a lot to me. And do not forget to hit the subscribe button.